We're very positive on Coinbase, especially in light of the court ruling for Ripple and against the SEC. Not all together, there were some puts and takes, but by and large, we're very positive for exchanges. And so we're very optimistic. The stock has had a significant move. Remember in March, and I think in June, we were looking at Wells notice and an SEC suit, which really hammered the stock, but did not take it to new lows. And you saw we bought at those levels. And so as the stock has escalated to the top of, it's the second largest after Tesla now in the flagship strategy, and it's the largest in ARKF, our fintech strategy, we're simply taking profits and reallocating the capital to perhaps some laggards.
For those that didn't see it this past week, a huge moment happened for cryptocurrency, and it all centered around XRP and the company behind it, Ripple. Essentially, the company Ripple was being sued by the SEC for selling unregistered securities, which they believed was the token XRP, the third largest cryptocurrency by market cap. However, in a court ruling, the judge ruled against the SEC, saying XRP was not a security. This is a big moment for the crypto industry for a few reasons. First of all, the SEC is currently in lawsuits against two of the largest cryptocurrency exchanges in the world, Coinbase and Binance, on claims that they are facilitating the sales of unregistered securities, meaning cryptocurrencies. However, this XRP ruling really takes the wind out of their case, and as a result, we have seen Coinbase stock surge on the news. On top of this, the main regulatory risk for other cryptocurrency tokens like Ethereum has now also been removed. If XRP has been ruled not a security, then Ethereum is also definitely not a security. In her latest interview on the topic, Cathie broke down why her and her firms actually been selling Coinbase stock on this news after a big run-up. Make sure to stick around to the end of the video where Cathie also breaks down why she thinks markets are going to trend upwards now as inflation falls fast and we enter a new age of the roaring 20s. Also guys, if you want to stay most up to date on the crypto world, I just launched a daily 5-minute crypto newsletter that covers expert predictions, on-chain data breakdowns, and breaking news, all for free. Click the first link in the description, enter your email, and join 2,000 others to become a better crypto investor right now. Now here's Cathie Wood and her Bitcoin outlook.
Well, let's see. We have been buying some of, I can't talk about all of these trades, but we have been buying some because they're still in process. We have been buying some of the genomics names that have not caught fire and have been held hostage by the depression in the healthcare sector generally. So that's what you'll see us do is, again, we probably already own these stocks. We have reinitiated Teradyne. Teradyne is still in a base, and so we did use some of the Coinbase for Teradyne, which is a play both on the semiconductor cycle around AI and automation. It bought Universal Robot, a Danish company, several years ago, and we think that that space is about to boom. Well, we actually bought NVIDIA because we knew it was going to be a player in autonomous vehicles, autonomous taxi platforms. We bought it in 2014 when the fund began at $5 and rode it up to $350 and then saw it take off with AI and leave many other companies that we think are going to be huge beneficiaries of AI, leave them behind. So we basically reallocated into other AI plays that are not as obvious. NVIDIA is very obvious now. Everybody knows it. It's priced accordingly, 25 times revenues. We're cycling. Tesla's the biggest AI play opportunity out there, and it's roughly seven times revenue. So our valuations are based on a 5-year investment time horizon. So we must believe, or we do believe, to be conservative, that we should not assume that current multiples or valuations will extend into the 5-year period. We actually assume they will decay. Go more towards market-like multiples. So that's a headwind we face. We must believe that the combination of revenue growth and margin expansion is going to more than overcome that valuation headwind and deliver a compound annual rate of return of 15% over the next 5 years. If we And you'll see with NVIDIA last year when we sold it, and then again in January when we sold it, it had dropped below that 15%. Well, I think they should put into context what has happened in the last 2 years. Interest rates, the Fed jacked interest rates up 21-fold. Any long duration asset, and in the world of equities, innovation is going to be the longest duration. All long duration assets were slaughtered last year. The bond market, now that's long duration as well, but it's usually a flight to safety vehicle. The bond market last year had its worst year since sometime in the 1700s. If that was going to happen to bonds, which are usually flight to safety, just because they were long duration, that was going to happen to ARK in spades, and it did. Now, where are we? The market is starting to look to the other side of the interest rate increase. And they're starting to look at inflation, which is crumbling. Inflation is crumbling. I know that a lot of people use the word sticky, but you look at the leading indicators of inflation, they are coming down rapidly. And we do believe we're going to see deflation, which we're already seeing it at many places, but even in the broader-based indices, and the Fed will have to adjust, and we'll be on the other side of the horror show we just went through. I don't think we've been wrong about it. When we were in COVID, we were talking about inventory shortages that would cause supply chain problems and the inflation that would come from that. Sure, we didn't know about Russia's invasion of Ukraine, but I think when history is the judge, and it will be, that history will judge the inflation we went through as the result of a massive supply shock to the system. And they will look at the comparison, not to the 70s, which I know Larry Summers and Mohamed El-Erian and others have used that analogy. We use the 19 teens. We went through a pandemic back then, the Spanish flu. We went through a war, World War I. We were on the gold standard, so money supply had to fall as inflation went up. Inflation went to 24% June of 1920, dropped to -15 in June of 1921, and we moved into the roaring 20s. Why? Massive innovation, telephone, electricity, automobile. This period is much more like that period than like the 70s. And again, history is the judge. It will look at the inflation chart, which went like this, and is going like this now. And it will seem like it happened in a flash, even though going through it feels like we're in slow motion.
So there's Cathie Wood's take on Ripple's court victory over the SEC, the implications for the crypto industry, and her take on the current state of the market. As we move into what Cathie predicts to be the new age roaring 20s, with fast falling inflation and upwards trending markets, it's critical to stay informed, especially in the fast-paced world of cryptocurrency. So don't forget to sign up for our daily 5-minute crypto newsletter via the first link in the description. Stay on top of expert predictions, in-depth on-chain data analysis, and breaking news in the crypto world. Join the community of over 2,000 individuals just like you who are looking to become better crypto investors. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.